reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis, then they have gold as a protection.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition. Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Gold, the money of humanity, portable, a divisible medium of exchange, and a constant unit of account. In the West, most believe gold is nothing but a barbaric relic used as money only in the past. The public sees gold as a form of jewelry, something that can be easily converted to dollars, especially as of late, as almost on every corner you see a We Buy Gold store. But is this the end for gold? A metal that wars have been fought over is truly now just a banking tradition and something you only think about during wedding anniversaries. To start, what is it that makes gold so special? What is it that makes it a precious metal? Gold is extremely rare. All the gold mined in human history can fit into 3 Olympic-sized swimming pools. And if those pools were filled with water, the gold wouldn't rust. Gold has no reaction with air, moisture, or most corrosive agents. Gold's history goes back to early human history. In 3000 BC, the Egyptians were the first to smelt gold. By 1200 BC, they were wearing it as jewelry. The Lydians were the first to coin it, though. In 564 BC, the Chinese were quick to follow along with the Greeks. However, it was the Romans who used gold as a national currency system, something that helped the Roman Empire thrive for 5 centuries. Unfortunately for the Romans, Rome started to strip their currency and devalue it as spending increased, which is one of the reasons their grand empire ended in 476 AD. It was Rome that cleared the way for the future of gold as the one true money and individual currency itself. By the 19th century, all nations, with the exception of China, were on a gold standard. Today, not one country has a currency tied to gold. However, as we can see in Iran, gold is still the ultimate money. Iran is currently working around sanctions by accepting gold for oil. Where fiat currencies can be easily controlled by central powers, gold has no flag or allegiance. PeakResources.org believes that as the fiat currencies get devalued to deal with the sovereign debt crisis, gold demand will soar. The problem and opportunity we see is that the supply is already maxed out. So if a wave of demand comes, we could see the gold price move rapidly on supply and demand fundamentals. The inflation will simply be the icing on the cake. You see, gone are the days of easy gold discoveries, like the one in 1799 in North Carolina, where a 12-year-old boy found a 17-pound gold nugget. Today, according to statistics from Casey Research, only 1 in 6,300 gold projects go into production. Gold discoveries are declining, and projects feasible for production are very hard to find. As of 2012, roughly 60% of gold demand was met from mine production. The rest came from recycled gold. Think about this number. Only 60% of demand is met with current mine production. This is a dramatic gap in supply and demand. Recycling gold has become an important part of the gold market. Since 2012, supply from recycled gold is up over 93%. Without this gold, we would likely have a much higher gold price due to the lack of supply from new mine production. There are 2 very important trends to observe going forward. Gold is becoming more expensive to discover. liquid fuels are rising along with labor. Roughly $1.2 billion were spent on gold exploration in 1993. 20 years ago, this resulted in 55 million ounces of primary gold discoveries. In 2003, $1.5 billion was spent in exploration, with just over 25 million ounces of primary gold discoveries. However, in 2010, we saw over $5.7 billion spent, but we only had about a total of 20 million ounces of gold discovered. 2. Gold is becoming harder to find. Ore grades are declining, and high-grade deposits are extremely rare now. According to the USGS, ore grades have fallen 38% since 1997 for underground gold deposits and 35% for open-pit mines. Conclusion: the fundamentals for gold as an investment have never been better. Currently, gold is not tied to any currency. It is being held as real money or fiat insurance by the global elites. As the debt crisis rises and the fiat currencies circle down the drain of devaluation, the demand for gold will soar, but not just because of the inflation that is coming. It will be because we have peaked in gold discoveries and gold production. The restoration of gold as recognizable money and a safe haven will open up the floodgates to new investors, but it will not help us increase the gold supply. We all know how this ends. Gold is going a lot higher and should be one of the best investments one can make during the next 5 to 15 years. If you are interested in gold as an investment, visit peakresources.org today to receive our free report on the 3 biggest mistakes gold investors are making right now.